Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to go ahead and cover our Monday buys and sells here on the 17th of May 2021. I went ahead and sold out of one position 100% and I moved into a brand new position here on our M1 Finance Roth IRA portfolio. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course get this video a thumbs up, make it blue, helps out this video, helps out the channel, and of course I always appreciate all the comments and the thumbs up that I do on these. So with that said, let's go ahead and get into the video. Okay, overall, Monday was not negative. Obviously it was negative, but it wasn't terribly bad. We came off Thursday and Friday over 1% gains. Now to Monday, had a bit of a dip. Now, kind of going over what I bought and sold. I posted it over on Instagram already. So if you follow me over on Instagram, Brent Matters Investing, I already kind of discussed my buys and sells and why I plan to, actually not even why I had planned to sell out of it. I sold out of AT&T prior to this announcement coming out, but the big announcement that came out today is AT&T plans dividend cut from their $43 billion Discovery Media merger. So this article kind of goes down a little bit further. It kind of breaks it down. I don't know why this is following me. Better remove that. But they're trying to, AT&T said that they're trying to cut its payout ratio from roughly 63% right now down to about 40 to 43%. So based on these numbers, someone did the math here, and this is showing that this deal gives AT&T shareholders the equivalent of a good dividend. It's still, I think it's going to be anywhere from 3 to 4% in the end. It's not going to be that 6 point in here somewhere. There's a 6% dividend yield at the moment. AT&T has grown and paid their dividend for the past 25 years. And it currently offers right there. AT&T currently pays out $2.08 per share, pegging its current dividend yield at 6.45. But what their current plan is from dropping that payout ratio from roughly 63 to 43, that's a 20% cut. So they're potentially targeting a cut of $15 billion to $8 billion, which will probably put their dividend payout in that ratio down in that 40% range, and also give shareholders, maybe $1 per share. It'll drop them down to about 3 to 4%, I believe, in the end. So this news actually came out after I decided to set my sell on this weekend to sell out of AT&T. So if we jump over into our portfolio now, our overall performance is sort of aiding by over the past, month. Take a look at. We just kind of been trending. We did trend upwards. We had a bit of a dip here, last week. I think this is what's the 10th? That was the 10th. 10th was a Monday. So Monday was positive in our portfolio. We had a bit of a pop there on Monday, negative on Tuesday, negative on Wednesday. Thursday made a recovery, and today we have our, basically flat at 0.05%. when the rest of the market is down 0.26, 0.42, 0.73. So by investing in strong, reliable names, dividend companies, they very rarely get hit really, really hard. And if they do get hit, you can always average down into them, lowering your unit cost. And over time, they just kind of continue to grow and pay you out those dividends. So our decision here today was to sell out of AT&T. I had been purchasing AT&T starting back on January 8th of 2018. I made my initial investment of $385. Now, from that point, 3 years ago, look at AT&T. 3 years ago, here's the price. Let's go ahead and remove everything else out of here. We can see that, 3 years ago, I purchased it at M1 Finance. Click on our button here. I purchased it at $38.40. I thought with their Time Warner acquisition that media business was positive for them. I may potentially see AT&T in the $40-50 range, but that backfired, taking on all that debt, and they really haven't been able to swim out of it. And we can see over the past 3 years, this position was down 4.95% over the past 10 years, it is down 1.16%. So, over the past 3 years, it has done nothing but trend sideways. And I'm actually, by averaging down, I was able to dollar cost average. So here, little buys. I bought for $31.89. I bought, that's dividend. I had purchased for $31.12, $3.43, and I continued dollar cost average my way down until my position was down in the $30 range. So my cost basis for AT&T actually ended up being roughly $31, $32. So today, when I sold out of my AT&T, I sold out at $33.54. All my shares, 33.48 shares, would actually put me net positive as far as my cost basis on my share price. Plus, AT&T had paid me roughly a couple $100 of dividends throughout the time frame that I had owned the shares in my portfolio. So off and on, it was positive, but in comparison to something like S&P 500, if I had just invested in an ETF or other positions in my portfolio, it would have been a much better, overall return of my investment. And I'm not bashing it. My portfolio over the past several years is still positive really well. This makes up 25 of my total portfolio out of the market, whereas I invest quite a bit more in ETFs first year. So this is just a portfolio I created inside of the Roth IRA to take advantage of the tax-free dividends and capital gains that this portfolio would generate in the future. But I still want to have it sort of in line with the market. Okay, so what did I buy today on Monday? Now, after I had sold out of my position, let's go ahead and clear this one. We can see here that I picked up MRK. I picked up MRK here at $79.30. I picked up 14 shares of MRK. Now, I'm going to be making a better video here on Wednesday. I actually have 7 stocks to take a look at for May, June of 2021. But one of the reasons I decided to buy MRK is because its valuation. Its valuation here in its current time frame, go ahead and go back to normal format. It actually looked like a really good opportunity at this position. I bought it at $79.30. Here, it's $79.70 now. So I purchased it right a little bit below here, but it had just broke. So if we look at the 3-month trend, it had broke below the 50-day, had broke above it, and recently broke above its 200-day simple moving average. And over the past 1 year, if we take a look at and remove these ones now, that opportunity for its dividend yield is not at its high point up in the 3.4. A 3% starting yield for MRK is actually a really good position in a company such as MRK. And when I looked at its revenue, net income, its earnings per share, where's my earnings per share? Earnings per share right there. Over the past few years, let's go ahead and look at the 5 years. And let's go ahead and take a look at it percentage-wise. We can see that, let's just look at it 10 years. So this kind of makes it easy. Divide by 10 for your average return on over the past 10 years. So price up 11.3% on average per year. The revenue is in the orange. Revenue not amazing, up 0.02% on average per year. Net income up 14.4% on average per year. And the earnings per share up roughly 7.9% on there. So that's their average returns over the past 10 years. So when you look at these two in comparison to one another, you have MRK with a price, 11.3% average return, and you have AT&T with it's in the pink, down 0.01% is your average return per year. So I felt like AT&T was at a better opportunity, or MRK was at a better opportunity, and decided with the current dip that it has had here recently, and it's rebounding into the future, I think it just made more sense to kind of move into a such as MRK. And of course, there's much more other fundamentals that I had looked at while taking a look at MRK, but we're going to cover that more in detail in our upcoming video. So that is just a quick video kind of going over what we decided to buy and sell today. We can take a look at its price to sales at a 4.2. Its forward PE at a 12.2. So that's really low in comparison to the market. I think the S&P 500 PE ratio is at a 28 to 30. Here we have MRK at a 12.32 forward, with this being a pretty much sales-driven company. It has a 4.2 price to sales ratio and 7.4 price to book. I think those are overall pretty good, but we'll go ahead and cover a little bit more of these Wednesday video. So that is going to be it for this video. Just want to quickly cover our buys and sells here on Monday. Let me know down in the comment section below, are you planning to continue to hold AT&T, buy AT&T, or sell AT&T? Are there any other stocks that you've purchased? Let me know down in the comment section below. And of course, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and thank you all for watching. Bye bye.